Yo, what is happening, traders? Thomas here from VAGAFX. Now, I want to discuss the state of the market and current market conditions. A lot of my community and also a lot of talk I've seen online, even with other mentors, they're going out and saying that smart money is dead. Financial institutions are now targeting smart money traders. I just want to tell you that the Forex market is literally decentralized, made up of many different markets. Now, the financial institutions that do create the movements that we see in the Forex market, they are actually trading on what's called the interbank market. And this is a market completely separate to retail traders. Retail traders are normally taking positions against their broker. We're not actually trading against the actual banks themselves. They do not even care for liquidity from retail traders. In fact, retail traders only make up around 5% of the volume of the Forex market, and obviously smart money concept traders are a fraction of that volume again. We are very, very small fish, even plankton, in a very large sea. These financial institutions literally have liquidity providers that actually provide them with liquidity for them to make these transactions. Now, the state of the market at the moment, very horizontal, very ranging. We do get more liquidity sweeps with horizontal ranging price action. And if we do actually turn on our news tracker on the chart, we can actually see, if you compare the right side of the image to the left side, we can actually see that this is one of the worst weeks of the entire financial year when it comes to financial news. Each one of these red lines does indicate a high impact news event, and we know that during times of high impact news, volume on average is much lower than usual, which does obviously cause ranging price action anyway. Less volume also means more liquidity sweeps, and the price action is actually more inefficient. You don't get the same level of mitigation of imbalance. Imbalance doesn't get fully mitigated entirely. You do get these sweeping price action. And I do often tell my traders to avoid high impact news events. You can see here that we've got supply and demand zones getting swept, and the market is going the complete opposite way of what we would normally expect. If we do look at the left of the chart, we can see the market behaving much more normal. We can see our extreme supply and demand zones getting respected much more often. I personally, guys, have been trading the same strategy for about 2 years now, and I have not noticed any difference from the norm in terms of supply and demand zones that we use getting rejected. These supply and demand zones are literally being formed from institutional volume, guys. Why? It's always been the same. If you backtest the markets back in 2015, 2012, you can actually see that the same price movements occur, and it's simply imbalance being formed from a large amount of orders that can't all be fulfilled all at once, and the market will be drawn back to those areas to mitigate and fulfill those unfulfilled orders. So the market hasn't changed, guys. The market won't change. We will always be trading order book mechanics, and order book mechanics will always work the same way. Anyone that tells you that financial institutions have started targeting smart money traders, they are either talking from a naive perspective and they don't actually understand how the Forex market works, or they may be a conspiracy theorist who's been watching too many of these fear-mongering podcasts put out by certain members of the retail community.